We're going to do a brief video on Occidental Petroleum Stock Analysis. And we've got a daily chart on here. It's a little hard to see, but we have a green 5-day, a red 20-day, and a blue 200-day moving average. I'm going to zoom in a minute. I just want to look at the macros real quick. You can see that this stock entered a bear market back in October of 2018. We plummeted all the way down from a high of around 87 to lows close to $8, and then you can see we came down, tested the 200-day moving average around the January 2020, made new lows all the way down to about $8 or so, went across, and then broke through the 200-day moving average. Now this is a very interesting and kind of unusual sharp turn in the 200-day moving average, but nonetheless you can see it made a sharp turn. This is more, even these tight turns are a little bit unusual, but we had a tight turn in the 200-day, and Occidental Petroleum closed above it and has been in a bull market ever since. You can see that we've rallied now all the way up to about the $75 mark here, and we're going to zoom in and take a look in a minute. You can see it respected the 200-day here, respected it here. As far as the 20-day goes, not really super helpful. You can see we had a lot of action underneath it. We were above the 200-day, below the 20-day for significant periods of time here. Not real. It doesn't give you a huge amount of confidence when that happens. But nonetheless, we stayed above the 200-day. This would have scared some people, but then you have to take a look at the fundamentals of oil prices and so forth. Same thing here. But as we started to really get into this bull market from about the $29 level, you can see we began to respect the 20-day moving average. We were above the 200-day moving average, and then we really started to move here in the latter phases. We went flat from about March of 2022, and keep in mind we had the issues with Ukraine and Russia, and we started to go flat and stayed flat. Really, if you're generous with it, stayed flat all the way across here until about the beginning of August. This flat was excluding this little spike here. This stock was essentially flat. Let's just call it around the $58, $59, $61 range here from the spring all the way through until the beginning of August. In the beginning of August, we did several things. We began to approach the 200-day moving average. Notice how big this area was here, and notice how the price came across sideways until it reduced that area or the space. And so same thing happened here. It's getting close to the 200-day. That is a test of the 200-day, believe it or not. It's not an obvious test like this, but it's closing the gap. Oh, this is too big. It closed it. People weren't comfortable with paying this much for this stock, so they drove it down or let it go down, and they buying it again. So as we got close to the 200-day at this point here, August 5th, they bought it and put it up for a new high of $77.13 on the 29th of August. There's very little. If you overlaid a chart of crude oil on top of this, you might find a little bit of correlation, but it's not a huge amount. Crude oil's been going back and forth in a range, and this stock has kind of been doing that, so they're somewhat correlated. But this stock is basically not seeing a tremendous amount of buying interest since March, and that's kind of interesting when you consider there's a war in Europe. So I find that to be extremely interesting. But that's where we are with the stock. If you look at it today, this past 5 or 6 trading days, we're above the 200-day. We're still in a bull market on this stock. I wouldn't say this is a raging bull market anymore. It's a bull market stock, but not raging. If you look at it from this perspective, your 200-day is still sloped up. We've had a steep sell-off in the last week from about 77 to about 64. That's a pretty good sell-off on a stock. And it's an indicator that there's some fundamental issues going on. In my opinion, you can't escape the fundamentals on an oil stock, but they're not 100% indicative, but you can't escape them. And so that's a really interesting move in this stock. So I would say that this bull market rally, there's an argument that it's beginning to peter out. There can't be that much more in this right now for this stock, at least not until it comes down to about 60. We're at about 64-ish right now. I look at this stock to come down around 60 and see if people come in and buy it again, not for a complete test of the 200-day, but kind of a modified test at around the $60 level. If that happens and we stay above this early August lows, then I think you might get a rally in this stock back up in this range here, about $73 range. I don't necessarily see the stock making a new high until we get some, unless and until we get some price action on crude oil. But 73 down to maybe 60 and up to around 73, maybe even 77. You might make a new high somewhere in there in late third week October is a reasonable assessment for a decline and then a rally. Again, all my opinion for entertainment purposes only. Let's take a look and see what RBAM research says about this stock. The daily range on this today is 65.97 and 64.40. We cover this stock, and we're 65.04 for a one-day hold and 66.51. So what is that? 65.04. So we're definitely in the buy zone for this stock, and right now it's trading at roughly 65. These are delayed prices, but 65, 66. So let's see. So you definitely could have made a few quarters on it today per share. So keep in mind, these are for entertainment purposes only, but the way this works, this is the 1-day column, the 5-day column, the 20-day column. Those are all holding periods. And so if you bought today, you could day trade out of this stock for a profit right now, assuming your own analysis said it was a good idea, because the 1-day hold column you can use for day trading on some stocks if they're volatile enough, and you could trade out of this, assuming your own analysis said it was a good idea to get in at that price. You could get in today, get out already, take a profit, and worst case, close it out tomorrow just before the market closes at a loss. So take your profits as soon as you get them under this system and close out worst case at 1, 5, or 20 trading days, depending on the column, at a loss if you did not take a profit sooner. You always want to take your profits as soon as you get them under this system and close them out worst case at the 1, 5, and 20 day holding periods. These are trading days, not calendar days. We put them out every day for 190 stocks before 7 a.m. Monday through Friday. You can get all of our algorithmically generated entry prices at rbamresearch.com. There's a link in the description below, and they're all out before 7 a.m. Monday through Friday. In addition to the 190 stocks, we cover the major forex pairs. We cover BTC crypto. We cover the most liquid futures. The stocks right now are all longs, and everything else has a long or a short every day, Monday through Friday. If you like these videos, please hit the like button. It helps us out on the algorithm. Please subscribe if you want to do that. If you have a great comment on how to make these videos better, we'd love to hear it. Please leave it in the comments section. And keep in mind that everything you see or hear on here is for entertainment purposes only. It's all our own opinion. You have to use your own analysis. You can't use our entry prices for anything but entertainment, and you definitely trade at your own risk.